Hello everyone and welcome to your weekend in review and look ahead. I am Will Hassel as always, and we are starting off with our charts of the Dow, S&P, and NASDAQ. I'm going to start off with what happened this previous week. As we can see, markets generally went up. We had a large number of kind of mixed economic data, both domestically and foreign, that kind of caused the markets to kind of start off a little down, then really just kind of grind out for the rest of the day. Didn't really have too many bad days, except for Wednesday was a little rough. But Thursday we had some interesting economic news come out of Japan with record trade deficits, but U.S. ignored that and continued to go on. Housing data for the U.S. wasn't that good either. Continued higher. It's kind of been good news is great. The markets go up. Bad news is kind of great. The market goes up. Slash it kind of goes down at the beginning, and then everyone buys the dip. We've had a large number of deals go out through the week. The biggest, some of them being activists buying Forest Labs for $25 billion, and but the deal that everyone had been talking about is Facebook's buying of WhatsApp for $19 billion. For those of you that don't know what WhatsApp is, it is a messaging app that you buy and for 99 cents at the beginning, and then they charge you for every year that you go and you use it. It's basically texting, but not actually texting as an SMS, but you're texting through the app, so you don't get charged for texting on your phone bill. And we will go and talk about what WhatsApp means for Facebook later on in the video. I'm going to go and look at some of the technicals and some simple moving averages for the Dow Jones, starting off with this is a 5-day chart for this past week. We kind of closed below all of our moving averages on Friday as we went to a weaker close. Friday afternoon, like I said, we were mainly up for the week. Had some kind of sluggish days where we had good news in the morning, then bad news later. This was the Philly Fed survey that went and came out, but not a whole lot of big data this last week that really is going to affect the markets too much. Just like I said, I mean, it's kind of been this kind of, good news is all right, bad news is, we're going to blame it on the weather, and we just keep trying to grind higher. And that's basically what has been happening for this past week and last week too. S&P closed below all of its simple moving averages I have up here: the 200, 21-day, and 50-day moving averages. Not too much different. NASDAQ got kind of bumped up on Friday because of Under Armour, which I will talk about later in the video. But it once again closed below all of its moving averages, just like the rest of the major indexes. Going into what's going to happen this next week, not a whole lot of big things going on. Tuesday's when we first get our economic data, and that's for February consumer confidence. We're looking for 80.1 as opposed to last period of 80.7. And also on Tuesday, the European Commission publishes its winter economic forecast. On Wednesday, we have for numbers wise, January new home sales, we are expecting 400,000 flat versus last period of 414,000. You can see they're kind of pricing in the weather variable for that. And also on Wednesday, the United Kingdom releases its second estimate of fourth quarter GDP, and the House Financial Services panel holds a hearing on Dodd-Frank's impact on asset-backed securities, which I think will be interesting, and you'll definitely see the financials react to that on Wednesday. And then Thursday, we had January durable goods numbers. We are expecting negative 1.05% versus last period of negative 4.2%. And also on Thursday, we have those weekly jobless claims being released as well. And a conference on financial stability and the role of central banks is held that day and on Friday in Frankfurt. Some of the speakers include ECB President Mario Draghi and the Bank of England's Governor Mark Carney and the Deutsche Bundesbank's President Jens Wildmann. So that's kind of like a big kind of economic presentation in Europe going on that day. On Friday is kind of our big data day. Japan reports January national inflation and industrial production. That's going to be a good number to look for in Japan because we get once again the emerging market side of it and kind of see how the third largest economy in the world is doing over there. But on Friday, the data that we're looking at, I'm going to start with the data that I'm not going to be looking at as much, and that's the February Chicago PMI number. We are expecting 57 flat versus last period of 59.6. And then the February Michigan sentiment number, and we're looking for 81.2, which is the same as last period. Now, the big thing that everyone's going to be looking at is Q4 GDP predictions. It's the second prediction on Friday. People are expecting 2.5% as opposed to the last period of 3.2%. It looks like people are pricing in the weather a lot for this. So that means that we're going to be expecting, they're expecting 2% GDP as opposed to, remember at the beginning of the year, everyone was talking about over 3%, no more 2% GDP. So that's going to be the one that we're really going to all want to look for that day. On Thursday, some interesting earnings that are coming out is Best Buy, Kohl's, and Salesforce.com, and also Sears Holdings announce their results on Thursday. If you're a big consumer-focused investor or have some of those consumer names, Under Armour, Michael Kors, Nordstrom, stuff like that, Nike, you're going to want to pay attention to that. It kind of goes with what we've been seeing with the February consumer confidence and the Michigan sentiment numbers, is just trying to get a read on the consumer just to see exactly how they have been doing. Going to start rolling into how I performed this last week. I didn't perform that bad when it came to the overall markets. This is AIG. This is Visa. And then we also have Starbucks and Michael Kors, starting off with JP Morgan. Pretty much kind of went in line with all the rest of the markets, closed below all of its major averages except for the simple moving average. In respect, here's Goldman Sachs, Morgan Stanley, and Citibank as well, kind of, still iffy. AIG, my next one. Actually, I'll bring back JP Morgan so I can show you how HCGE. I am long QQQ still, so everyone can go on. I already went through that chart. On Thursday, Hedge had a really big pop because of that kind of, it gets really big pops in the morning and then you see it kind of fade out and kind of just, on Friday it ended unchanged. But it kind of gets these big pops on people worrying about data. Like I said, it's a hedge for me. I am coming in hedged. I'm not zero hedged or zero hedge. Because I do go and see some volatility coming in this next couple months out. Hedge didn't work out too bad. I mean, it's been declining, but that's why I expect it to. I expect it to decline, but be there when markets are volatile. AIG had an interesting run up on Monday and Tuesday. Monday it kind of closed out because of some of its earnings. But Tuesday it went up almost to where it was after hours as soon as earnings came out, and it was kind of interesting. It was just a rise for almost no good reason. I was thinking that it was because of just people thinking, I just am going to buy because it was down, and that would have been good, but it did close below, just barely closed below 49 for the week. Kind of stayed flat Tuesday and Friday. Didn't have that many big moves except for Wednesday when it kind of took off that the highs that it took on Tuesday. It did close below all of its simple moving averages there. Once again, 50 is one of those key levels for AIG, as we see here. After it cracked above 50 on Tuesday, went up. You can see kind of battled 50 on on Wednesday, and we decreased. Didn't quite rise to 50 again, and continued down. Visa was kind of funky this week, I have to say. Didn't really go along with the major markets on Tuesday. Did kind of put in some nice highs. But on the latter half of the week, Thursday and Friday, we are back to our dreaded battleground, 23 level. 24, as we know, is always one of those big resistance levels for Visa. We see here popped above that. And then once we hit below it, immediate drop, tried to break out, didn't, kind of fail to, down below, up, down below. It's 24 is always one of those big things where you see people start to short in it. 24, and also you see some people with their sell stops at 24. It's just always been kind of a big battleground for as long as I've been covering it, which is now a couple months. Going with Starbucks. Starbucks on the decline here this past week because of really no good reason. People are saying it's because of the rise in coffee prices, but shout out to Danny 1980 on StockTwits who raised a point that I thought was really was what I thought was a really good point in this kind of what I call BS of coffee prices affecting Starbucks too much. And his tweet, his post on StockTwits on the Starbucks page was, coffee prices shouldn't affect their bottom lines as they have locked in their prices for years to come, just like the airlines and fuel. And I think that's a really good point. Starbucks was probably buying all their beans used out on the coffee futures on JO for quite a while. And, coffee beans are a very small percentage of the Starbucks expenses as well, when looking at the details of the quarter and their financials. And it's a really good point, but unfortunately, all the people that trade Starbucks JO have been doing this pairs trade of you're long Starbucks, short JO, or long JO and short Starbucks. So, as long as JO actually rises, Starbucks will fall because of that pairs trade, not because of the bottom line fundamentals, which is pretty frustrating. It's no other news other than JO traded up, and that's why it was it traded down, which for me is really frustrating, but I can't really do too much about it. So going into Michael Kors, my final stock in my portfolio, had a relatively strong first start of the week again. It did look like it was going to touch that huge, and when I mean huge, I mean dramatic psychological level of 100. If Michael Kors breaks that, shorts better cover immediately because it's going to skyrocket. Michael Kors, whenever there's bad consumer numbers like there was on Tuesday, people flock to Michael Kors because it is the strongest in that particular sector. Actually, I kind of want to draw a trend line here, kind of at the start of where this peak is, and go from that peak continuing that trend line. And then kind of going up following that. And that is kind of like a wedge type formation. I'm not too big on wedges and those falling patterns. I don't really know too much about that type of technical analysis. I'm just going to draw that just so everyone can go and see kind of what I see. I haven't really hit near that, but 99 is kind of a psychological resistance level here, as we saw when we broke above it. Then we fell below it, broke above it in the morning, hit it twice to attempt to break out, and then hit lower. So it looks like 99 is going to be one of those levels that we're going to have to break in order to keep moving higher. And then obviously as soon as 100 hits, it's going to be gone. But it did go below its simple moving averages. It ended up below its simple moving averages right here. Kind of interesting that this 200-day hit right there on that 97.95 level right there, just kind of hit that upper bound and then hit lower. I feel like that's kind of a little interesting move there, but like I said, 100 is going to be the big level to beat. That's a huge psychological point for Michael Kors, but if not, 99 is our nearest terms resistance level. Now going into some of my picks for my overall stock picks, Under Armour and Dow, and then when I cover the Facebook deal, we'll go and have FB up here too. Oh, and you know what? I'll mention Tesla, even though it's not one of my stock picks, and well, actually neither is Facebook. But I'm going to cover the deal and why it's actually pretty good for Facebook. I'm going to start off doing Tesla here. Tesla beat on earnings, but the revenue was pretty bad. Made a new high at 21.15, above that key 200 psycho number or psychological number. Really kind of confirmed that's going to be up below. It's going to be there, and it looks like the next kind of support level that you have is at right here, right where that old 52-week high was at 206.04. Because I mean, you can go and see when I go and I extend this kind of level, it almost hit right there. It went really close, but then kind of bounced off of it a little bit. 210 on Friday seems to be yet another kind of support-ish level, where we saw kind of a large battleground for it not to go below it, although it kind of finished below it there at 209.64. I don't really, I can't really get long Tesla personally, not because, you know, there's not bad price action or anything like that on it, but because I'm in school all day, and that's one of the things that, you know, I have to deal with is I can't look at it and trade it all the time. Like I did over the summer, and I did make money trading Tesla quite actively. But unfortunately, since I'm in school, I just can't do it. I had a friend who's long Tesla calls, and also has, so he did pretty well, and I congratulate him for that, because he does like it on a multi-year basis. Going into Dow, I'm kind of like the price action here. Whoa, 47. Look at that line, my lord. That's a big line for Dow when you start looking at it, because I mean, it hit above it on Tuesday, hit it on Wednesday, and then subsequently on Thursday too. I apologize for the noise. My parents are seeing a friend out the door. And they kind of closed below it on Friday. So Wow, and then on Friday it closed right at that 200-day moving average. That's actually really interesting when you look on the technicals. I like Dow. I think they're going to have a pretty good year, seeing as they do have exposure in the natural gas space, and natural gas prices are at pretty much all-time highs right now. So they have a good portion of that to them. So you can go and see that that they'll have good quarterly results this next quarter, but their previous quarter was very good. Kind of saying no to Dan Loeb's idea of splitting it up. Doesn't really bother me too much, but 47, man, watch that number if you're a Dow Chem fan. Under Armour, kind of mad at myself for this one. Love the quarter, as I talked about last time. Really like it. Kind of muddled throughout the week. I called on the bottom here at 103 on StockTwits. You can go and check me on that. I said I liked it there, and ended up being pretty good level to get into, and all things. I'm kicking myself because I declared I liked it there, but I didn't get in on Friday right before the interview. I was like, it was in 107 in the pre-market, so I'm like, do I get in? Do I get in? I feel like it's going to go up, but do I get in? And I'm kicking myself for not taking that opportunity. That would have been a nice trade. But, yeah, kicking myself for that one. But I like the stock. I think it's one of the stronger plays in retail. What I think of it as, I think it's the athletic Michael Kors, in the sense that it's the strongest in the space. And you're going to see a whole lot of people flock to it. If we keep getting these weak consumer sentiment numbers. I'm just checking my time here. Okay, good. Looking at Facebook here, when we go in, what the big news was it made a deal with WhatsApp for $19 billion. As I explained, WhatsApp is a texting app that you go and buy for 99 cents. That allows you to text without using SMS, meaning you don't actually have to pay for it on your phone bill. And it's very, very popular over in emerging markets and other and not as developed markets, because you don't have to pay as much. And it does have a large number of users. About if I remember right, it was about 500 million users or so, 600 million around there. So, and they're growing at about 1 million users a day. So that's basically $1 million in sales every single day. And then also 70% of their users use on a daily basis. So it's pretty impressive numbers. And for Facebook to go and get into this kind of a space, it's really kind of a statement, not so much as a defensive play as I've been thinking, because they're kind of saying Facebook is going to be one of those dominant sources of traffic. With this app, they're going to go in, they're going to be controlling a whole lot of the app space and mobile traffic that's going on across the smartphone markets, when you really think about it, because you've got a lot of people logging on Instagram. You have a lot of people logging on Facebook on the mobile device, and then now WhatsApp. They're going to be gaining a whole lot of traffic on mobile devices, and I'm kind of expecting Facebook to kind of integrate WhatsApp into the actual Facebook into Facebook itself. Even though they've kind of said that it's going to be a separate company, I do suspect that there's going to be some type of integration into it, where you can go and carry a Facebook chat into a WhatsApp type of a thing. And I think if they don't integrate, it's going to be kind of weird. Looking at, just going to go to a 10-day chart real quick, because 69 looked like a level there that kind of had that kind of double top-ish forming there, but did go and break above that because of the WhatsApp deal. But yeah, that's kind of interesting. 69 was a level, then it broke above that, hit 70, and then retraced. But finished around that 200-day moving average, just like Dow did. That's interesting as well. I like Facebook. I I think this will actually really increase its earnings. They did pay a lot for it, but I do kind of understand why. It's kind of the traffic space. And Mark Zuckerberg, kind of like Elon Musk, is one of those people that you don't really bet against. Because I mean, I do see this deal as being quite smart. So, yeah. And I think now I'm just going to wrap it up, and I'd like to thank everyone for watching my videos, for following me on Twitter, following me on StockTwits. I actually did this week, on Thursday night, subscribe to the Hedgeye newsletter. I do like it. I would recommend it for people that like kind of the morning newsletter type of the thing. I think it's really useful. Yes, please visit my blog, see some of my other videos. Please go to the Leaders Investment Club page. I do post all my videos there as well, and also you can go and read some other awesome articles by Jeremy Wilkins-Smith. Has a great new article out there called Euro Volume Too Low. Alfonso Rodriguez, Income Inequality, the Double-Edged Sword, you know, and then John Dukas with The Future of Investment Banks. We've got a whole lot of cool articles out right now, and pretty interesting articles. So I do recommend you check that out, and also check out Ben Banks's weekend updates and setups as well. Great technical analysis guy. And I'd just like to thank you all for watching once again, and hopefully I'll see you next time.